Yo, yo, yo. What's up, guys? How y'all doing? How are y'all doing, guys? Welcome to the backtesting session with Amos. So, let me just do a little tweet right now, just so more people can join, like I usually always do. How are y'all doing? Did you guys trade the bank holiday? There was a lot of volume actually today, so it was definitely tradable. I saw. If you guys did trade, how did you do? Live backtesting session to yo. By the way, the guys who won the last 50Ks, I got y'all. You should receive your accounts like tomorrow max. All right, I got y'all. All right. 2 seconds. Just doing the post right now so more people can join in. All righty. How's it going, guys? All right, so for the planning for today, as you guys know, we're gonna go over all the best trade you could have caught last week using a scalp model that I show every single time on this channel and also in my YouTube channel that I judge being extremely valuable and a good way to read price action. Then once we're done with that, we're gonna go ahead and do a little backtesting tournament where we're gonna see if you guys actually know how to trade and actually can replicate the strategy that I'm going to show you guys today. There's gonna be two 50K growth account giveaways. Last time um, we did numbers. I don't know exactly how we're gonna do it today, but uh, definitely gonna be a give. There's gonna be a giveaway, 100%, 100%. All right. So by the way, just for the giveaway, for you guys to know, I need at least bare minimum 100 likes. All right, I need 100 likes, and as soon as we have 100 likes, then we will start the giveaway. So let me just do a little announcement on my Discord, and then we're good to go. Because when the announcements are made, um, like 2 hours before, everyone just forgets about it, anyways. So all right, perfect. Okay, so we're gonna start right now with the trade recap, best trades of last week. And then once we're done with that, we're going to go ahead and do a little backtesting tournament. So hopefully you guys are ready. Um, this is going to become something that we do, of course, every single Monday. But I'm going to go a little bit deeper into those tournaments, of course, trying to make them a little bit more valuable for y'all for sure. So when are you doing an Asia stream? I don't know if I'm gonna do it an Asia stream. Actually, I don't know. Once we're done with the backtesting session, I could look at uh, at the market there. So we'll see. All right, perfect. All right, guys. So let's go back on the last week and let's talk about all the best trade you could have caught last week using a strategy that I show every single time here. So we're going to start with the strategy. How do I utilize it? What are the time frames I'm looking at? And then once we're done with that, then we're going to see, we're going to take a look at all the best trade you could have caught last week. All right. So let me just pull out my journal here to the right. Because of course, I do always take notes on my journal. So right here. Sorry if you saw the Discord talking to Nick. So journal. All right, perfect. So let's go ahead, and it was on Monday. The first trade was on Monday. Let's go. Let me go on this 15-minute chart. All right. Okay, good. Here was Monday. All right, perfect. October 6th, 2025. Every time I'm around the 13th. Wait, let me see. Any trades today? Yeah, I took one trade. It was a loss, unfortunately. All right, it was on the 6th. All right, go. That's good. That's good. All right, we're going here on the 6th, and let's talk about all the best trade you could have caught on that day. So starting here, you guys saw, basically I'm going to start with what's the strategy that I'm actually looking at, and how do you utilize those time frames in order to find, the blueprint behind why you should take a trade. And then I'm going to show the execution behind how you should take those trades, let's say, and how I view those trades, form in real time. Okay. So basically what I'm looking at is fair value gaps. Okay. You guys already know what is a fair value gap. It is a 3 candle pattern where, let's say here, it's a bearish fair value gap, where the up wick of, let's say here it's a bearish fair value gap, so the down wick of the first candle doesn't touch the up wick of the third candle. Okay. When that happens, what does it let? It lets a fair value gap. Okay. And when I see those fair value gaps, a lot of people, what they're going to do is that they will, use them as an entry model in order to predict that price is going to go lower, and basically to create new lows in the market, since there's a lot of aggressive sellers located between those candles. What I like to do though is the opposite. I like to target those unfilled fair value gaps because I know there is a lack of volume traded right here. Basically what happened inside this 3 candle pattern is that you went down so aggressively that there was not a fair exchange between buyers and sellers right here. Okay. And if there's not a fair exchange between buyers and sellers, it means that price currently is leading too much to the downside and is inefficient. Okay. And for the market to be healthy, we need to retrace back towards those inefficiencies so we can find fair value. Okay. That's the point of a fair value gap. So usually what I like to do is that I like to wait for those fair value gaps to be formed, and instead of using them as an entry in order to predict that price is going to go lower, I'm going to react to this fair value gap being created, and I'm going to target it for a quick scalp. Okay, so here in this case, looking at overall structure, you want to look at liquidity pools, and you also want to look at unfilled fair value gaps. So let's say here in this case, you have the pre-market low, you swept it into a higher time frame gap. Okay, so this 1 hour gap. And then instead of, looking for shorts and being extremely aggressive and predicting that price will go lower without any real reason on why price should go lower, and with, let's say, a system that is not repeatable in the long run, what I will do is that I will wait for those gaps to get created, and this exactly shows us exhaustion in the market. It shows us that sellers can no longer push price down, and those sellers are not able to accept price below the previous candle's low. And once I see this, I know there is absorption right here, and we need fuel to go up or down. So if we need fuel, what is the fuel? This 15-minute gap. Okay, you guys will be able to see it every single time. Okay, so let me do this first example. You guys see we just closed back inside the range. Okay, here on this 15-minute chart, we have an unfilled gap right above us. So then I'm going to scale down to this 1-minute chart and then look for potential signs of aggression from those buyers in order to trade back towards this unfilled gap. Okay, this is what I'm going to do here. So here you guys can also see we have equal highs above us, so it could be a really good target. So when this candle closes, I want to look for signs of aggression from those buyers. I want to look for, okay, are those sellers trying to push price down right here when the new candle opens up, and then buyers shoots up? to break structure to the upside. As soon as I see this, I know my buyers are strong enough so I can potentially scalp this unfilled fair value gap. So here, let me show you guys what happened. Unfortunately, here it was a scenario where if you were not positioned before that candle closed, basically, you were not going to get picked up. But here, let's say overall, you were able to read that the market was going to go towards this unfilled gap, but just no entries, okay? Unfortunately, what I would like to see as an entry is all the potential entry models. You guys know it's either a regular break of structure, okay, so an order block. I call those order blocks. I have a YouTube video on those, on exactly what is an order block, but it's just a high, low, higher, high. As soon as you see this, you enter on the pullback towards the unfilled gap. Or you can have also the breaker, low, high, lower, low, higher, high. And then you would take this failed order block, pull back to it to then scalp the most recent high, okay, so the unfilled 15-minute gap, and which is called absolutely a return of the MACD. It is called the unicorn model right here. And also you could use inversion for value gaps, so aggression from those sellers. You create a gap on the 1, 2, 3 minute chart, you disrespect it, this is your confirmation to go along. This is usually the 3 entry models, okay, that I will look at in order to scalp those unfilled gaps. But the overall framework is all based on when a gap is forming, I know that I should be looking for potential trade because there is a lack of fuel in the market right now. There is not enough sellers that are willing to accept price below the previous candle's low on this 15-minute chart. I know those buyers, those responsive buyers are starting to get aggressive, and we need a healthy pullback in the market. Okay, so just for extra theory behind why I look at those trades. So here, not really any good break of structures to the upside, not anything really to be to look at on the 1 minute chart that was screaming for me to take along. Okay, so let me show you guys the trade I saw on that day. Okay, can you guys see a potential good trade opportunity on that day? Okay, for me, really, when I look at this action, most candles are not showing us a good fair value gap, showing us, you know, something that is really clear. So in this case, this is just a day where there's just no trades, okay, unfortunately. All right. So let me just go here on Tuesday. Okay, Tuesday was a great day. Okay, why is it a great day? It was because there was multiple time frames that were aligning together. Okay, first trade we saw was here on the hourly candle. So here we have all-time highs. We're sweeping all-time highs. We're closing back. So what do I see from this candle first? Okay, I'm gonna show you guys all the framework behind how I read those candles. Okay, so when I see a displacement candle, what is screaming at me when I look at the chart is that if we have displacement and a fair value gap is formed by 3 candles, it means that we already have 2. We have this first one, we have the second one, and if the third one is not pushing to the upside extremely aggressively, I could potentially have a trade because I know a gap is most likely going to get formed if we do not trade back down towards the first candle's up wick. Okay, so here I have my overall framework. I know that since we saw displacement, I have also an internal buy side liquidity here, that there is going to be a new candle opening right here. Okay, we already formed the first 2 candles. A brand new candle is going to open. So then I can mark out this high as being a high where I do not want to see price closing above this area. Okay, please close below. Okay, this is how I mark it out. Okay, this is what's happening inside my head. Please close below this area. So here, a brand new candle is going to open up. And what I want to see is buyers trying to be aggressive, but sellers, responsive sellers stepping in, squeezing those buyers. So then I can see price closing back inside the range on this third candle. And if I see price closing back inside the range of the previous candle on the third candle, what does that mean? If we do not trade back here, it means that an unfilled fair value gap is going to get created. And if I know that Price just swept a higher time frame buy side liquidity pool and is failing to close above the previous candle's high, and we have also an unfilled gap below us. What does that mean? Chances are that when the new candle will open, we will drive back down towards the unfilled gap. Okay, so here let me just show you guys what's happening. So I do not want to see price closing above this candle's high, and I do not want to see price also trading back towards the first candle's upwick, because we want that unfilled fair value gap being created. Okay, so here let me show you guys what happened, exactly what I wanted to see. So we have this unfilled fair value gap being created. We're failing to close above the previous candle's high. We swept buy side. What do I know? When I see this kind of formation, I know right now we have exhaustion from those buyers. I know that sellers are active and we need some fuel in the market. In order to go up, we usually need to see those fair value gaps being filled, and then we're going to have the fuel to create new highs. So now what am I going to do? I'm going to scale down to those 1 minute chart, 1, 2, 3 minute chart, and then I will find a reason on why I should go short back down towards this unfilled gap. Okay, so I see buy side liquidity sweep, I'm bearish. We're failing to close above the previous candle's high, I'm bearish. I have an unfilled gap below me, I'm bearish again. Okay, so now let me go down to this 1 minute chart. I know I will most likely hit this internal low soon because this new candle is going to open and this fair value gap just got created. So then let me find reasons on why I should enter shorts. Okay, here, look at this 1 minute chart. It is absolutely perfect. We're sweeping an internal high perfectly. Cannot even close a singular handle above this high. Perfect. And then I create what? 1 minute bullish fair value gaps. And what does that mean? It means that I can locate lower time frame bullish participants in the market being aggressive. So I can say to myself, all right, if we're truly bullish, we should respect this bullish fair value gap in order to create new highs in the market. But if we're bearish though, and my overall framework is right, we will disrespect this gap and we will drive back down towards this unfilled gap on the higher time frame. So then what happened? We disrespected it. So here is a really good entry to go short from. Now let me just do this and find where I could go. Yeah, buy and sell button. Okay, that's good. Okay, so here I'll go short one. Perfect. I put my stop loss right above this candle's high, and I'll go for a 1-to-1 risk toward back down towards the unfilled 1 hour fair value gap. Okay, what's the framework? Failing to close above the previous candle's high. We have an unfilled gap right below us. And then when I know this, when I can see this, I then go back to the 1 minute chart and try to find an entry. Okay, so here I went short. Stop loss right here. Take profit below the slow. You guys can see in literally 5 minutes, we hit the target. So again, one thing that I keep saying every time I do those live sessions is that when you're scalping, you should be right quick or wrong quick. Okay, when you have a level that you want to see hold, you either want to see a hold quick or you want to see it get absolutely demolished and destroyed quick also. Because if you're scalping for 20-25 points and it takes 50 minutes for your target to be hit, it is most likely because you're trading something with no substance. Okay, you need to see price moving in your direction and your levels holding. So here I saw that those buyers got disrespected here using fair value gaps on the lower time frames, and overall I knew that we had way more chances of breaking lows because of the higher time frame narrative and this 1 hour unfilled fair value gap. You see, new candle opens up and we drive back down towards the unfilled gap. Really good trade. So then let me show you guys other trades you could have caught that were exactly the same. Looking at this was on a 1 hour chart, but there is multiple trades that you could take like those, which are on the 5 minute chart, the 15 minute chart, the 30 minute chart, etc. So let me show you guys a really good trade I saw right here. Okay, purely just by looking at price action, okay, and everything that I told y'all in the last few minutes, where do you think price is most likely going to go here? Truthfully, okay, tell me, do you think overall, okay, yes, the trend is bearish. You see, there is a lot of bearish candles in a row printing to the downside. But right now, at this point, what can you read? Do you guys think price is going to go to the upside or to the downside right now in the next 5 minutes? What do you think has more chances of being filled? This low or this internal unfilled 15-minute gap? Okay, I want to see those answers right now. I want to see who's actually active and who understands the system. What's up, Holly? How are you doing, brother? Hey, brother, do you have a full model explained on YouTube? Yes, I do. Okay, do you think price is gonna go up? Absolutely. Why? Look, when I see an unfilled gap being created and us failing to accept below the previous candle's low, this tells me that price has way more chances of being in a state where it's exhausted and needs fuel. And if it's exhausted and needs fuel and to go up or down, then those fair value gaps are the next draw on liquidity. They are your next target. Okay, so here in this case, when I see this, okay, basically I see it before it even happens. Okay, that's really the true edge, is being able to see it before that candle even closes. So here, when I see those two candles, I'm like, all right, this is the first candle. Then when I see a displacement candle, I'm like, all right, I could potentially be trading the third candle, because if that third candle doesn't trade towards the first candle's down wick, okay, so do not trade here. Okay, if price do not trade when it closes right here, it do not trade back towards the first candle's down wick, it sweeps the previous candle's low and closes back inside the range, chances are we will form an unfilled gap and we will most likely see price getting back towards the gap to have enough fuel to go up or down. So here I mark out those levels. Please do not trade here, and here please reject this level. Okay, I need to see price failing to accept below this 15-minute candle's low. So then I scale down to this 1-minute chart and I want to play with those levels. Okay, looking at a 15-minute framework. So here I do not want to see price trade here, okay, because I want to see an unfilled gap being created, and I want to see price also rejecting this level on a 15-minute chart. So now let's look at what price is doing. Right now it's 54. There's still some time left for that candle to close, okay? And then right here, look at what happens. We are creating a inversion for value gap back to the upside, respecting the level that I had in the first place. Look at this 15-minute candle. Okay, it is reacting back up to the upside, rejecting the previous candle's low, closing back inside the range, letting this unfilled fair value gap. And we still did not trade back towards the first candle's up wick, which means that we are in a scenario where those buyers stood up, okay, they were being aggressive, and those sellers were basically being squeezed back under this range. Okay, so here I will go down to this 1-minute chart and I will try to find a reason on why I should enter back towards this unfilled gap. Okay, so here 56, I see we have an inversion for value gap. What am I going to do? I will locate myself right here. I will go long, stop loss right below this candle's low, predicting that this candle will close exactly back inside the range, because we created an inversion for value gap and we have a scenario where those buyers are starting to be aggressive, and if we do not trade back towards the first candle's up wick and we reject this level, then we will have an unfilled for value gap scenario. So it is perfect, literally a perfect trade. So I go along here. Why does it do that? All right, I go along here, stop loss right below this candle's low, take profit back inside the unfilled for value gap. Okay, let's see what it does. When it starts to push like this is when I know, okay, this is a really good confirmation. I want to see those highs getting broken. So 58, 59, this candle just closed right here on this 15-minute chart. You guys see? Okay, on this 15-minute chart, this candle just closed. So now you were entering a little bit before, predicting that this was going to happen, but this is where the true edge actually lays. So here you open and you go up towards the unfilled gap, which is an extremely good trade in my opinion. What happened? You failed to accept price below the previous candle's low on this 15-minute chart. You knew that if you found a reason on why you should enter longs and you did not trade back to the first candle's down wick, then you would have an unfilled fair value gap scenario. And when the new candle opens up, then you need some fuel in order to go up or down in the market. So this was a really good long opportunity. Is there any questions regarding that? But I think right here was an extremely good scenario of an unfilled fair value gap. Okay, so here failing to close below the previous candle's low, unfilled gap right above you. You position yourself while that candle was moving back to the upside. This is where you're gonna get higher risk to reward trades. If you wait for that candle to fully close, then you're gonna have most likely a screwed risk to reward, because price will tend to go to the upside extremely aggressively towards those gaps. Okay, so here you entered inside this unfilled inversion fair value gap, and then saw the push up. Okay, what can you see from this trade? The level that you had as your entry was extremely reactive, and you won fast. And if you are gonna lose, you're gonna lose fast also. So this is exactly what you want to see. Trading from gaps seems hard for me. I don't know. Yeah, targeting those gaps really logical and easy to target. Yeah, the thing is you do not. That's what I like about scalping. You don't have to know exactly where price is gonna go on that day. You just need to locate where aggression occurs in the market. If you see those bearish fair value gap being formed, you know that price acts like this. Usually price creates a low, pulls back, high, lower low, lower high, lower low. But if price goes down aggressively, this is like a healthy market. But if price goes down aggressively like this, you know that it is most likely going to find exhaustion somewhere. And when are those signs of exhaustion, super good to find a scalp? It's when you create those unfilled gaps and when you're failing to close below the previous candle's low. It could be on any time frame, but when I look at those gaps, I know there is most likely going to be exhaustion. You cannot see a market go down for 500 handles without pulling back. It usually does not happen. Okay, and those pullbacks, you can see them on any time frame, guys. Any time frame. I can go down to this 5-minute chart and show you guys exactly the same scenario happening right here. Okay, you see this 5-minute chart goes down aggressively. So now I know this is the first candle, second candle. I could play the third candle if we're failing to close below this previous candle's low. If we're closing back here, I know there's going to be an unfilled fair value gap scenario, so I could potentially look for longs back here. Okay, so what are my levels? I will mark out this high being a level where I do not want to see price trading to, and I want to mark out also this level, which is an area where I do not want to see price closing below on this 5-minute chart. So then I could scale down to, let's say, a 30-second chart. Usually if you're looking at a 5-minute chart for your framework, then you're going to be looking at a 30-second chart for your entry. Then right here, look at what's going to happen. Exactly the same thing. You're pushing up. Look at what this 5-minute candle is going to do. You have an unfilled gap right above you. What do you think price is most likely going to do? Feel it. Okay, look at what's going to happen. You open and you go fill this gap. Then the rest, we don't know what's going to happen after. This is predicting. This is why I hate to enter, let's say, on those gaps, predicting that price is going to create new lows, because you never know if those sellers right here are actually going to get aggressive or are going to get squeezed by those buyers. I want to react to the market. I do not want to predict. So usually when you wait for those confirmations, you are playing a reaction. Okay, you're reacting to this fair value gap being created, and you're not predicting that this gap will hold. This is a little bit more advanced, but this is what I like to do. So here, let's say, if you're looking at a 5-minute framework, how would I position myself potentially? I would look for signs of aggression from those buyers in order to trade back towards the gap. So here, we're creating an inversion fair value gap. We push up. So now if we get a retracement back down towards this level, which is my breaker block, then I could potentially go long for a 1-to-1 risk to reward. Of course, it's a quick scalp, but it's still 24 points, okay, on a 5-minute candle. Okay, so here, let's say you got the pullback, you're in longs right here, and then look at what price is going to do. My target is right there. Few minutes, I hit my target. Literally not few minutes, 1.5 minutes. Okay, this is this could happen on any time frame, the 1 hour, the 15, the 30, the 4 hour. But what's most important in trading is having the same exact framework every single day and building with that framework, understanding everything about the framework, understanding when you should wait for price to create a new structure, when you should be a little bit more skeptical of a fake out. A lot of things you could master regarding any frameworks. It could be anything, but let's say when I'm talking about this framework specifically, then these are the stuff that I think about. Okay, waiting for a fake out, being a little bit more patient, etc. Okay, so any questions regarding that, guys? For now, this looks pretty good. So this was the second trade of the week, okay, which happened on Tuesday. So here, let me go here on Wednesday. So these were all the trades that you could have caught. Then let's go on Wednesday right here. And Wednesday, it was just more of a reaction play that I saw. So you could basically, okay, let's talk about it. All right, so there's multiple ways you could read the chart. And let's say here in this range, what do I see? Truthfully, I see that we are creating a gap. So there's two ways you can play. There is you looking for potential shorts because you know this is an area with low volume and buyers were so aggressive that there was not a fair exchange between buyers and sellers right here. And you know that for the market to be healthy, we need to retrace back towards this area because this is the fuel of the market. And if we were going to be bullish on that day, then this is most likely the PDO rate that will create new highs. Okay, that's first. Or second, you wait for price to enter this level, knowing that there's most likely going to be buyers responding to this area. And if you enter into a higher time frame level where buyers should defend their position in order to create new highs, but those lower time frame sellers are being aggressive entering inside this level, then you know there's going to be blood in the market. You know that if you enter a higher time frame level where there's a really big concentration of buyers, but those lower time frame sellers are being aggressive trying to push price down, then this could be an area where a squeeze could happen. So here, let me show you guys two potential trades you could have caught. And let's say here you had a potential short opportunity back down towards this unfilled gap. You see this gap being formed, okay? And then right here you're failing to close. Basically, this is a little bit more advanced as a trade, let's say, but right here, you're seeing aggression from those sellers, down close candle on the 15, pointing towards an unfilled gap. This could be the moment where you should look for shorts back down towards this unfilled. Okay, so here, let me go down to this 1 minute chart, find a reason on why you should enter. So here, you created a nice sweep of liquidity, market structure shift back to the downside. You could definitely go short, back down, stop loss right above this candle's high, targeting the unfilled. Is it a good trade? In my opinion, it's not exactly like all the other trades that I show y'all, that I gave y'all basically just before, because we closed above the previous candle's high on this candle, which made it not as clean. What I wanted to see here, let's say, was price pushing up, failing to accept price above the previous candle's high, so I could short this structure back down towards the unfilled gap. This is basically what I would look at in most parts, but right here you see we're closing above, so it becomes a scenario where you could find aggressive buyers defending their position inside those wicks to create new highs. So here, let me just show y'all a trade that I saw that was pretty clean. You can mark out those gaps as being areas where you are most likely going to see those buyers defend their position. So here, let me scale down to this 1 minute chart and show y'all what's going to happen. And you know, a good trade you can catch in those kind of scenarios. Okay, you see the market is running to the upside, you can mark out your 15-minute gap, you know, an area where those buyers were extremely aggressive last time price traded there. So you know that next time price trades here, they will most likely defend their position. Good, this is the first thing you know. So you just mark out this zone as being an area where you could potentially bounce from, but you're not predicting that this level will hold. Okay, a lot of people will do the mistake of just putting a limit order inside this 15-minute gap and thinking that a fair value gap is enough for you to be profitable. No, it's just a concept. What's going to make you profitable is having a system regarding, you know, that framework overall. So let me show you guys a good trade you could have caught. So here you mark out the zone. Let's wait for us to enter inside the zone and be able to have a read on the chart. Okay, so here what's actually happening, we are entering inside this 15-minute gap right here. You see, we just entered inside this 15-minute gap. So what do I see? If I go to this 2-minute chart, I can see that lower time frame sellers are being aggressive, entering into a higher time frame zone where buyers should defend their position. This zone is a bullish zone. But right here, looking at fair value gaps are telling me the same story on the lower time frames. I can see that we have a 2-minute bearish fair value gap. I can mark this out as being a bearish zone. Okay, so here I know there is most likely going to be blood in the market. Why? Though we entered a higher time frame zone where buyers should defend their position and those lower time frame sellers want to push price down because they're creating signs of aggression to the downside. So now I could say this famous quote: if we are truly bearish, we should react to this gap in order to create new lows. Okay, if we are truly bearish, we should react and respect this gap in order to create new lows. But if we're bullish, though, we will disrespect this gap and we'll have a good play for a 1-to-1 risk to reward back to the upside. Okay, so here I mark out this zone as being a zone where if we're truly bearish, we should respect this level. But if we're bullish, though, we will disrespect it. Okay, which is called an inversion for value gap. So here, let me show you guys the trade you could have caught. Nice long opportunity. You see, entered that bullish zone, failed to close a singular handle below this low. Disrespect this bearish for value gap. Perfect. Let me long, stop loss right below this candle's low. Take profit where? Put that line in black right here at a 1-to-1 risk to reward. Okay, why do I put a 1-to-1 risk to reward and I do not swing for the fences and go for a 1-to-3? Because when you're looking at a trade like this, it is a trade based on a lower time frame order flow entry. Okay, you're looking at signs of aggression from those sellers, signs of aggression from those buyers, and you want to predict a little move in the market. I do not know if price is going to create new highs back towards 79. I just know that looking at the order flow, I can potentially find a good scalp here for a 1-to-1, because when those sellers are going to get disrespected and squeezed, they will have to cover. And if they have to cover, then I will see a move back to the upside. And what is the aspect of covering? It's when participants are forced to get out of their position at break even or at a loss by clicking on the opposite direction. So here, if I know there's a lot of sellers right here, how are they going to cover? They're going to click on buy. So everyone is going to be buying at the same time. Those buyers right here, those aggressive buyers that push price up, and also those sellers located inside this gap. So we will have a sharp move in the next 2 minutes. Okay, aspect of covering in the market auction theory. So here you buy. Why does it do that? Stop loss right below this candle's low. Take profit, 1-to-1 risk to reward. And as you guys see, around 6 minutes, you hit your target. What happened? Pushed up, pulled back, covering, create a new high. Okay, this is not exactly the unfilled scenario. You could have had, let's say, trade back towards this unfilled. I did not really like it, but there was also what I call the model number 1, which is the intraday volatility scalp model, where you take those gaps as being areas where you could bounce from, and then you look for potential signs of aggression from opposite participants to scalp in the opposite direction. If you are in a higher time frame bullish zone, but you see bearish aggression from those sellers, then just wait for them to get squeezed. Do not enter prematurely predicting that those buyers will, respond to this gap. Wait for aggression from those sellers. Wait for them to get disrespected. You know there's going to be a squeeze in the market. You go along 1-to-1. Okay. So here was another trade you could have caught, which happened on Wednesday, October 8th, 2025. Is there any questions regarding this trade? It was really beautiful. Why do I think this trade was good? And you guys will ask me, okay, I see a lot of those trades in a day, but why did you not take this one and you took this one? I will respond, and it's pretty simple. If you see an immediate reaction from the gap and you are failing to close a singular handle below the gap, it means that you saw absorption. If you're starting to create lower lows inside the gap like this, and you're going down, you're not respecting the level perfectly to the tick, it's not a trade, and it's not a scalp worth taking, in my opinion. Okay, you have the timing is not right, it's off. Okay, what's up, Matt? How are you doing? Damn, Matt is here. How are you doing, brother? Shout out to Matt. Hopefully we'll have a good session on Wednesday with the big announcement. I just received the news. This is what's going on right now. The next news that Tradeify have for us is just amazing. I've never seen anyone do something close to that. So make sure to tune in. So now let me go to Thursday. Let me talk about the best trade you could have caught on Thursday. Okay. Any questions regarding that, guys? If there's no questions, then I'll just go on the next trade. And of course, we're gonna do the backtesting tournament, guys. Don't worry. All right. So here, let me show you guys a really good trade you could have caught. So right here, you saw we created a 15-minute bearish fair value gap. So I saw signs of aggression from those sellers. Okay. What I see by this candle being created, I see that sellers were so aggressive that we did not have a fair exchange between buyers and sellers, and this is an area with low volume. So I know that for the market to be healthy, we will most likely need to retrace back towards this area in order to find fair value. Good, which is a fair value gap. An unfilled fair value gap needs to get filled. Knowing this, this is a scenario where you see the third candle close extremely aggressively below the previous candle's low. So this is not necessarily a scenario that I want to take, because the further away that I'm from the gap, the less chances I have to basically fill it. Why? It's the principle of risk to reward. If you're far away from a target, then the chances of you basically being in a 1 to 2, 1 to 3 risk to reward trade is higher. Okay, so in this case, I do not necessarily want to take those, because these are not low hanging fruit scalps. These are a little bit more aggressive scalps, and scalps that are not as consistent. Okay, so here, scratch, I do not want to take it. But then what happened right here was pretty clean. So here you see we created that displacement candle from this gap, and you created that unfilled bearish 15-minute gap. What does that tell me? Aggression from those sellers. Right now, this is an area with low volume. We need to retrace back towards this area in order to have enough fuel to go up or down in the market. Good. I know this is my next target. So here I know I saw this candle closing below the previous candle's low, and this is basically a moment where I would still consider the longs, but I would definitely be a little bit more cautious of the entry that I'm going to take. So here I will wait for this candle to close, a brand new candle opening, and if I see signs of aggression from those buyers, I will try to target this unfilled gap. So here, let me go down to this 1-minute chart. I know that the chances of us seeing this internal gap, if we see aggression from those buyers when this new 15-minute candle is going to open, is pretty high. So here, let me go down to this 1-minute chart and find a reason on why I should enter back towards this unfilled gap. So here, this is the high I'm marking out, which is the unfilled fair value gap, okay, to be exact. So here, I'll go down to this 1-minute chart, and what do I see being formed? Exactly the same thing. This is how I utilize those entry models, and I know when an inversion fair value gap is most likely going to have more substance than a random one on the chart. So here I know I have a target, I have an area with low volume, I know this area will act as a magnet. Good. So then look at this gap here being formed. I have a lower time frame confirmation that is telling me, all right, there's a lot of sellers right here, must. If we're truly bearish, we should respond and respect this gap in order to create new lows. But if we're bullish though, and my overall framework is right, we will disrespect this gap and we will fill this unfilled fair value gap, okay? Because we lack fuel in the market, okay? So here, let me show you guys what happened. We push up. Let's wait for us to see a nice bullish candle closure above this gap. We see it. Then the mistake a lot of people are going to make is when they're going to see this displacement candle, they will try to chase it. Okay, you do not want to chase, you want to attract. No, but in all seriousness, you always want to wait for the pullback to have the best possible entry. You do not want to be in a risk to reward that is 0.3, 0.4. You want to be and a risk to reward that is really close to a 1-to-1 for scalping. All right, so here, wait for the pullback, stop loss right below this candle's low, 1-to-1, and you have a really good trade back towards your unfilled fair value gap. So here we do the limit order right there. Good. Here's your limit order. You're getting filled. Here's your take profit. Okay, look at how much time it's going to take for the target to be hit. 1 minute, 2 minutes. What does that mean? It means that the level that I marked out right here was a good level and had substance for my scalp. It means that here there was true covering happening inside this 1 minute bearish fair value gap. Okay, and I really like to see those levels being held exactly like this. I do not want to see any candle closures back inside this rectangle right here, which is the bearish fair value gap on the 1 minute chart. I like to see us waking this level and starting to push back towards my overall framework, which is the unfilled 15-minute gap. So really good trade right here that happened at around 11. So the entry was at 11:47 on Thursday, October 9th, 2025. Okay, really good trade. Is there any questions regarding this trade? But one thing you can take away from this trade right here is that the entry model was really clean, and you do not want to chase on the 46 candle right here. If we're too close to the high, you want to wait for the pullback to then see price moving back towards your direction. What's the behavior of a healthy market structure shift entry model? Because sometimes I get stop loss and I entered using market. Okay, I will explain what I think about this question in a few seconds. Let me just go over the last trade you could have caught on Friday, and then over the trade you could have caught today using this exact framework, and then I'm going to respond to your question. All right, because I will need to do a little bit more explanation regarding that. It's a definitely a good question for sure. So here, the best trade you could have caught on that day was this one. Okay, so you see here, multiple times you formed a gap and you filled it. Okay, I wanna make you guys realize that there's not just one opportunity on the day. There's multiple good opportunities. Let's say right here, I was able to read that price was most likely going to get back towards this unfilled fair value gap when we failed to close below the previous candle's low. Okay, right here, unfilled fair value gap. Look at what's going to happen. We filled it. Good. Let's wait for another scenario. Right here, you formed a gap. Unfortunately, you closed below the previous candle's low, but look at what happened right after. You go and fill it. Perfect. So I know my overall framework. Even if I do not find an entry inside this case, or it was an A+, I can be selective because it gives me more than one opportunity in a day, okay, which is really good. So here, let me show you guys what happened. When I see this displacement candle being formed, I know we're in a scenario where there's a lot of aggression from those buyers. So here, if we do not trade back towards the first candle's upwick and we're failing to close above this candle's high, okay, so if the new 15-minute candle does this, opens, goes higher, closes back inside the range, we'll be in a scenario where we're going to have an unfilled fair value gap right below us, and those sellers, those responsive sellers, stepped in and will basically force us to go back towards the unfilled 15-minute bullish fair value gap. Okay, so here, let me show you guys what happened on this 15-minute candle. We closed back inside the range, failed to accept price above the previous candle's high. What is most likely going to happen? We're going to fill this unfilled bullish fair value gap. Okay, so here, let me just go down. This is when I see this is the moment where I scale down to a 1-minute chart and I judge that my market structure shift will hold. I judge that the inversion fair value gap that I'm going to use is most likely going to hold also, because I'm not just taking a trade off of the 1-minute chart. I'm taking a trade based on a 15-minute framework that basically showed me overall that in the long term, I'm profitable with it. Okay, so here, let's go down to this 1-minute chart and find a reason on why I should enter shorts. So here, any sorts of break of structures to the downside, order blocks, inversion for value gaps are good reasons to enter. So here, exactly, what am I seeing? Inversion for value gap. Okay, if we are truly bullish, we should have held this gap here in order to create a new high. Good. I have an inversion for value gap back to the downside. I have a break of structure also to the downside, which is a bearish order block. I have a bearish breaker. So to respond to your question, when is a market structure shift a good market structure shift to hold? It's when you have a market structure shift that is pointing towards a certain framework that is valuable and that has substance. So here in this case, you formed a high, low, higher high, lower low, okay, which is breaking below this low. Okay, but to be more specific, you created this. Exactly. Okay. Okay, so now you have a breaker, you have an order block, plus you have the inversion for value gap, which was a gap that was created right here. So there's three confirmation that is telling us, okay, Amos, price is creating bearish PD arrays, okay, bearish confirmations that price wants to go down, is disrespecting all those bullish signs. Plus we have a level where basically when I was backtesting, it always showed me that when this level was being created, we tend to go back here because it is a magnet. It is a level with low volume. It is a level where to have enough fuel to go up in the market, we need to retrace back here. So now I judge that my entry models, my confirmations are actually worth taking the trade. Okay, you're always gonna see those market structure shifts being formed on the 1 minute chart, but not a lot of them have true edge in them. Okay, you need to be able to look at a market structure shift aligning with an overall higher time frame framework for it to work. So here in this case, as soon as you see this candle closing, wait for the pullback, stop loss right above this candle's high, take profit at a 1-to-1 risk to reward back towards the unfilled fair value gap, okay, which is a really good play. So here you sell. I'm going to put the stop loss right above this candle's high, take profit, 1-to-1 risk to reward back towards the unfilled gap. Look at how much time it's going to take for it to hit my target. 1 minute. What does that mean? It means that the level that I marked out as being my level where I saw the squeeze happening on the lower time frame was actually right. You know, so next time, so I could basically take all those scenarios and study them. Okay, when I have this kind of structure, a market structure shift, and I have an unfilled gap right below me, then it tends to hold. All right. But when I have accumulation and I have an unfilled gap right above me, what does it do? Does it sweeps the previous candle's high again, then creates the new confirmation? So you could basically study those scenarios extremely deep and know when to wait for price to open higher to resweep this high, then go down towards this target. When to enter before that candle even closed, when to wait for price to pull back towards the inverse, what time frame to look at. If it does this on the 5-minute chart, you shouldn't be in a trade. Etc. There's so many stuff you could master regarding this thinking, this overall thinking of how to read the chart on the 1 minute, 15 minute. It could happen on any time frame, guys, and I could show you guys literally an example from today. Okay, let me just do an example from today and you guys will be able to understand to a deeper extent. Okay, what happened in the beginning of the day was this. First ever trade you saw. You pushed up aggressively on this candle. When I see a displacement candle, what do I know? I could have a potential trade if price is failing to accept above the previous candle's high on a bullish displacement candle. I know this is a most likely going to be an unfilled fair value gap scenario. This is my first candle. You see this candle right here, first candle. This is my second. If the third candle opens higher, fails to accept price above the previous candle's high, closes back, and price never traded back towards the first candle's upwick, I have a trade. I have a short play back down. So here, let me go down to this 1 minute chart, mark out my levels. I do not want to see price trade here, and I do not want to see price closing above this high on the 15-minute chart. Okay, I know my timings on the 15-minute candles, and I want to pay attention to those candle closing and those candle opening. So here, this candle just closed 59 and 59 seconds. I know this new candle on the 15-minute chart will close at 14 and 59 seconds. So now I could play with the timing. So here we push up. Let's wait, okay? Let's wait, 13, perfect. What do I have here? An inversion for value gap. We created an inversion for value gap, and we have an unfilled, most likely gonna have an unfilled for value gap scenario. Okay, here, 13, this candle is going to close in 1 minute. We have an unfilled for value gap right below us. If I close below this line, which is the previous candle's high, I know the chances of us seeing this unfilled is going to be pretty damn high. And then at this moment, when they're both aligning, the 15-minute framework plus the inverse, this is where I judge that this level will be the area where those buyers will cover their position. Okay, so here, look, 15-minute chart, failing to close above the previous candle's high. We have an unfilled gap right below us. Then I scale down to this 1-minute chart, inversion for value gap. This is when I judge that my inversion for value gap will actually work. So here, stop loss right above this candle's high, take profit at a 1-to-1 risk to reward. Look what's going to happen. Opened higher, perfect. Okay, still had my stop loss being right there. Opened higher, found resistance, another break here, filled the gap. Okay, happened today, literally today on the 15-minute chart. I could show you guys an example on the 5-minute chart of this happening also. Okay, if I go to this 5-minute chart, what happened right here at 9:35? We swept sell side, failing to close below the previous candle's low. We have an unfilled gap right above us. What does that mean? It means that price on the 5-minute chart is signaling us that sellers were so aggressive that that buyers and sellers did not have a fair transaction right here. So price right now created inefficiencies, created gaps that need to be filled in the market for the market to be healthy. Those gaps right here are extremely good potential draw on liquidity. Okay, so here, what do I expect price doing? I expect that price is most likely going to fill this gap to have enough fuel in the market. So also, what am I also thinking when I see this? I'm thinking that, okay, if price is most likely going to go back towards this internal unfilled gap, if price goes down right now, then it's most likely a manipulation to grab orders to then go back up. This is also something I tell myself, okay? Power of 3. If I know this level has a lot of chances of being hit, then and my bias is bullish, then every single down move after my framework got validated is most likely a fake out until proven otherwise. So every lows inside this range is most likely just lows that are going to be used as liquidity sweeps in order to go back up towards my overall framework, okay, which is the unfilled fair value gap. So here, if I go down to this 1-minute chart, 1-minute chart is not the best to look at those kind of scenarios, but here it was a good scenario. Why? Because we formed a 1-minute inversion fair value gap. So here you have an inversion fair value gap on the 1-minute chart back towards an unfilled 5. This is a good scenario, but if you want extra confirmations, let's say you would go on a 15-second chart and those internal lows here, and you see this candle, this new candle just opened, price went down, and I would assume that if we sweep this low, it's most likely just going to find resistance, so support in this case, to create new highs. Okay, so here what's going to happen, we did not even sweep this low, but potentially an SMT, but you see what happened right here in this case, we held the inversion, created the new high back towards the unfilled 5, which is exactly the framework I want to see in the first place. Okay, you see this candle, as soon as it closed, I'm like, all right, we are going to be bullish. We will fill this unfilled gap on the 5, scale down to this 1-minute chart, find a reason on why I should enter right here. I would just wait for a pullback towards this 1-minute inversion for value gap, stop loss right below this candle's low, take profit above. That's it. As simple as that. And you could have bigger risk to rewards. You could be like, okay, I really like to play a 1 to 2. Let me just go back break even as soon as we hit a 1.5 to 1, a 1 to 1, and then, I'll play with them. I play with those, you know, with those levels. Okay. So if you hate 1 to 1s and you're a 1 to 2 risk to reward trader, look at what happened. We pushed up back towards that 1 to 2. Okay. But your job is to study the scenarios where it is actually worth your time to hold above the unfilled. Okay. Because as soon as the unfilled gets filled, basically the target gets filled, then you do not know if those buyers are going to be aggressive or those sellers are going to start picking up price to create new lows. This is why having a high risk to reward in a lot of cases is predicting. Okay, it definitely works. Of course, it is just a not the same type of trader that you need to be in order to trade those kind of systems. Okay, voice crack, GG's. Don't clip me. Grown ass men with having voice cracks. That's insane. But that was it. So we could do I know the stream should be ended right now. We'll do one we'll do one session. We'll do one Okay, so we have 50 likes. I need 100 likes for us to do the 50k growth account giveaways. Okay, so I'm going to give away 2 accounts. So make sure to like the stream right now. We're 91. We should be able to get that 100. Come on, guys. So let's say here, 6 p.m. going into today. What do I see? Let's say on the higher time frame. Is there any gaps? Is there anything that I see? Right now, we're just in an accumulation phase. So when you do not see gaps being formed, you're accumulating. So you are in a lower probability market conditions. Okay. So like the stream, guys. Make sure to be subs also to the channel. We're gonna do a 250k growth account giveaways if we can reach 100 likes right now. I'm also gonna do a backtesting tournament right now on FX replay. So let me go here, do this, battles, new battle. We're gonna call it Tradeify TV. 10-minute. NQ as the asset. All right, we're good. All right, so I just created the game. I'm gonna share the ID right here. I just shared the ID with y'all in the chat. I think you guys could just join from this link. You guys should be able to join through this link. I'm just gonna open the. All right, so tell me if you guys can see it. If you guys can see the. Can you guys join the game? So just click on the link down below, and you guys should be able to join the game. We're at 74 likes. I need 100, bare minimum 100, in order to do the 250k growth account giveaways. So come on, lock in, guys. Lock in. Still gonna change the color behind. That's gonna give us a little bit more. Because the screen is. Can you guys join? I don't see anyone joining. Challenge a friend. Are you guys able to join? Wait. Yeah. Okay, I see you guys joining. So I'm gonna start in like few few seconds, and you guys will be able to join right after. So I'm just gonna start right now. Actually, you guys could still join the game after. Um, we're running out of time, so all right. So what I'm gonna do is the same thing. I'm gonna mark out my unfilled fair value gaps, and then I will try to scalp them once they're being formed. All right. So this is what I'm gonna do, guys. Let's go. So I'm on a 15-minute chart. What? Why is it doing that? What? Wait. Why? It's lagging. Why is it doing that? Please let me join the battle again. Okay, that's good. I couldn't skip. Okay, that's why I couldn't skip those 15-minute candles, so I reset it. Okay. Okay, so let's lock in here. Okay, so here you guys see we formed an unfilled gap right here on this 15-minute chart. I am bullish biased, and I think that this order block will hold in order to create a new high back towards this unfilled. So here could be a good potential long opportunity back here for a 1-to-1 risk to reward. I could also let it ride a little bit more. So here I'll go long. I got filled. You see exactly here, unfilled gap right above me. We're failing to close below the previous candle's low. I know that if I see signs of aggression from those buyers, it will most likely be good confirmations. It will be a confirmation worth taking back to the upside because I have a target. I have this unfilled gap. I have an area with low volume that needs to get filled. So here I'll take off 75% of my position, put my stop loss back to break even, and we're going to try to let it ride actually here. You know what? Back here, this should be good for a 1.8. Come on. Nope. All right, just let us that 1-to-1. It didn't want to. That's why I hate those high risk to reward trades, man. I just can't seem to get them right. 11.15. Oh my god, that's a good market structure shift for me. Damn. All right, I'll take it. I'll take this one actually. Back here towards this high. I'll enter market. This is a really good play, in my opinion, for a long. Okay, I just got absolutely squeezed. That was insane. All good. Okay, here, what am I thinking? Same thing. We just formed a gap. I'm not going to deviate from the gap strategy, right? I just deviated from it and got absolutely smoked. So here, unfilled gap right above me. We're failing to close below the previous candle's low, which is 401. So now, do I have the right structure in order to create new highs back here? Not necessarily. Could I just put that here? Okay, so you see this should become my drawn liquidity, this high. So now, since I do not have the right confirmations, I would potentially need to see price going back down first and then create bullish structure so I could scalp it. That's how I would do it, okay? Here it went immediately, but this is not necessarily a scenario I want to play. Why? Because I did not have the right kind of structure before that candle closed, okay? So here, let's wait. Okay, now I could go to next day open. There's 5 minutes left. I need to actually lock in. Let's go. Damn. I have an unfilled gap right above me. That looks pretty good. That definitely looks pretty good for a scalp back up. I'll take longs. I'll have my stop loss being right here. I'll take longs right there. I have failed to close below the previous candle's low. I have an unfilled gap right above me. I have a nice structure to the upside, forming basically a 3-minute gap here. So Let me just try some longs right there. They look kind of they look weird, but I'll try them. Nice push to the upside. You see, we have an unfilled gap right above us, a level that is worth our time, worth watching, worth being bullish until it gets filled. So here, taking off some positions right here, going back break even, and then let me try to go for that high after. Okay, but I know that this level right here, if we're gonna be bearish, we will most likely defend. Those sellers will most likely defend their position right here in order to create new lows. Okay, nice push here. So now you could basically start trailing your stop, but I'll let it right here. And this is a scenario worth taking for a 1.5 to 1. Really good trade here. Was able to catch that full distribution. Price is most likely gonna keep going up. Actually, you could have caught that 1 to 2.3. So really good trade here. Okay. Okay, same thing here. You see we have an unfilled gap right above us on this 15-minute chart. Perfect. So now, do I have the right structure in order for me to look for longs? Right now, we're disrespecting bullish for value gaps. Of course, we're holding this, this support level, but I don't necessarily use it that way. I would want to see a break back towards the unfilled gap. So now I know that we have a whole lot of chances of seeing this gap getting filled right now. This is always what I have behind my mind, is the timing when I'm scalping. So right now I know we're most likely going to see bullish pressure to the upside, but am I going to look for longs right here? Not necessarily, because I don't have the right structure. So here, this is a moment where price going to the to the downside is healthy. I want to see price sweeping this low, then start to flip to the upside. That will be really good. Unfortunately, we didn't find any trades here, but you see, it doesn't mean that we formed an unfilled gap that I'm going to be in just purely off of the framework. I need to also time it with a 1-minute structure. I need to be, to have the 1-minute chart aligning with the 15. Okay. So here, not that bad. Not a bad trade here. This 15-minute candle failed to close below the previous candle's low. We have an unfilled gap right above us. We created that break of structure to the upside. I could buy here with a tighter stop and going for a little bit of a bigger target here. Okay, here I got absolutely smoked. Unfortunate, but still good overall framework, good confirmations. Price went back towards the gap, but you see here, those kind of fake outs, this is when you're going to be like, okay, this market is absolutely, I need to like go back towards, back testing. It's if you truly, let's say, take the time, you will understand why sometimes price will fake out in that sense. And let's say here in this case, it was still a really good trade since we broke to the upside and created that inverse. I would have taken it either way. But you see that fake out? It was a fake out, but then price went back towards the unfilled. Unfortunate. Still a good trade worth taking, in my opinion. Okay. What time is it? 3:40. Unfilled gap is above. Yeah, we flipped here. I'm gonna try some longs here back towards the unfilled. I like it. So here you see what happened. We have an unfilled for value gap being right here. This is my target. Then price opened lower to sweep liquidity, which is this previous candle's low. Then we create that market structure shift. I judge that this market structure shift will have substance in order to create new highs back towards this unfilled. 35 seconds left. Let's see. So here it's 47. You will see the 50 candle is always big. So 49, look at what the 50 candle is going to do most likely. Boom. Oh, no way. One handle away from our target. GG's. Okay, so okay, 15 seconds left. Unfortunate. Unfortunate. We could do another game actually. Eh, what is this? What? Yo, what's that price action? Oh, minus 3%. GG's. What's the podium? Okay, still in. Okay. Not a lot of people played this game though. No, it's not. It's not. The giveaway is not based with that. Okay, so we still don't have 100 likes, guys. Come on. We still do not have 100 likes, and we're 16 minutes. There's we literally have no time left. So come on, we need 12 more, 13 more likes for us to do the giveaway. So lock in, guys. Lock in. At 100 likes, I'm doing the 50K growth account giveaways. The giveaway is not based on the battles, by the way. I think I said that like multiple times. I'm gonna put this chart for now. Like the stream. Okay, so I'm gonna do the first one. We're gonna do okay, we're 100. I'm gonna do a number from 300 to 400 right now. Okay, 300 to 400. I'm looking at my phone right now to see who's actually gonna win. Come on, 300 to 400. All right, there's immediately got taken out. It was 333. It's money to you. It's the first one who said it, and then Khalil just right after. Damn, 333. You guys are absolute geniuses. All right, so 333. It was, who was it? Shit. Who was it? Yeah, it's T money to you. Congrats, you won a 50K growth account giveaway. If you did not receive the account from last stream, don't worry, you will receive it. All right, don't worry. Okay, and then okay, now we're gonna do a number from 900 to 999. 900 and 999. No, it was not before him. I see the comments, bro. Nope. Ah, shit, you went close. No. No. All right, Gohan, you won. It was 932. Congrats, my brother. So Gohan, and who else won? Who else was it? Who else was it? It's T money to you. Okay. Congrats, you guys both won so a 50K growth account. Each of y'all won a 50K growth account. So congrats to y'all. So appreciate you guys. This is the end of the backtesting session. I appreciate you guys so much for being there, showing up, and asking questions. It's an absolute blessing to be able to do those sessions. All thanks to Tradeify. So make sure you guys tune in to the streams this week. There's going to be a huge announcement. You guys do not want to miss it. It's literally the biggest thing that I've ever seen in the prop firm space. Definitely, I've never seen anything close to that. So make sure to tune in on Wednesday at around 10:30ish. But be there before, because I'm going to be live at from 9:15 to 10:30. So be there for my live stream with the Tradeify TV team. I'm going to be a guest there, and then there's going to be a huge announcement on Wednesday. So again, guys, I appreciate you guys so much for being there, for showing love, and I see you guys on Wednesday. Much love. Peace out.